Hello, this is Joe Pryor, the virtualrealestateteam.com, and this is a message that can go out for any type of buyer. I mean, you can be a owner-occupant as well as an investor, but after 2008, we just saw a lot of difficulty in terms of anyone obtaining a loan. In fact, back in 2008, 2009, I saw people with 760 credit scores get turned down on a loan. And that's just nuts. I mean, that is an incredible credit score. It means that you borrow a lot and you pay back on time, yet that was the market at the time. But, since 2008 to 2017, the market has rebounded, the economy has rebounded, and lenders are a little bit more optimistic about risk that they're taking in terms of handing out sums of money for either investors or owner-occupants. And so we're seeing back-end ratios loosen up a bit, so you can maybe have a little bit more debt than you had maybe when you tried to apply for a loan 10 years ago. But we're also seeing it in investment property also. So, for instance, I've talked about 15% down. That is something that has come into the market this year where you do pay some mortgage insurance, but, again, you may be able to buy 5 properties instead of 3 properties this way. That's out there. Now, another thing that we're seeing is what we call non-conforming conventional loans. Now, essentially what that means, loans that don't really adhere to Fannie Mae guidelines, that are not backed by Fannie or Freddie Mac. They're loans that are maybe given out by hedge funds, maybe insurance companies, maybe some type of a pool of money that says, we think it's worth taking the risk. Maybe the interest rate's going to be a little bit higher for you, but it allows you to do a couple of things. If you're a United States investor, for instance, one of the things you can do is go beyond the 10 mortgage rule, or law, I should say almost, that Fannie Mae has. You can't have more than 10 mortgages. And so maybe you want 20 houses or 25 houses. Well, the loans are out there for you. And they're good loans, by the way. They're not usury loans. They're not hard money. They're good loans. The other thing that we're seeing right now is an explosion. And I guess I call it an explosion in foreign national loans, because foreign nationals right now are buying a tremendous amount of real estate in the United States. There's a lot of confidence in our market right now. And so a lot of money's pouring in from Canada, but it's pouring in everywhere. The one thing that hadn't existed in a long time is loans that foreign nationals can get. And now, all of a sudden, we have 4 or 5 different lenders offering us foreign national loans. So for instance, there's a company that does a 15-year loan at 3.625% interest rate. It's fixed for 10 years, and then the term is 15 years. We have people doing 30-year loans with fixed interest rates for 5, 7, maybe even 10 years, and then they go adjustable after that for foreign nationals. Sometimes as low as 25% down, anywhere from 25 to 50% down. So if you're somebody listening to this, and I just got back from Israel talking to investment companies over there about the United States market, then you should be listening to what's going on in the lending market. Even if it's 50% and the interest rate is a lot bit lower and you were a cash buyer before, well, that allows you to get 2 properties instead of 1. And that allows you to have a 50% vacancy rate at any one time instead of 100% if one is full and one is vacant. So foreign national loans are coming, in bigger numbers. Loans for people that want to go beyond the 10 limit. If you're an owner-occupant, you're finding that, things are being just a little bit relaxed. You still have to show that you can pay the loan. But again, there's a lot of confidence in the United States real estate market right now, within the United States and outside the United States. And if you want to know more information about these loans, please contact me at joe@joepryor.com. This is Joe Pryor of the virtualrealestateteam.com in Oklahoma City, where we deliver traditional real estate values at the speed of technology.